Welcome. Do you have your morning coffee ready or whatever beverage that's in your cup? It's none of my business. No judging here. Okay. It's Saturday. If you've had a long week, I totally understand it. And I think this is one of the sessions that we always really look forward to. I know for me, I really do because it's a very casual setting, and that's why it's a morning coffee chat. And today we are going to go into a topic that I think a lot of people are really interested in, which is income and asset protection for real estate investors. And to be completely frank, though, I think at Treasure Talent, we always like to say that we are basically the real life business school here. Actually, out of curiosity, by a show of hands, who here has a business degree from a post-secondary institution like me and Ryan? And I think if you're running any kind of business or even as an employee right now with the job, I think we can probably all agree that most of us, unless you're an engineer or accountant of some sort, what we learn in school typically is not what's happening in the real life at the moment. And that's why for income and asset protection, the scope that we typically leverage and share goes way beyond just real estate investing for a reason. Because at Treasure Talent, we don't believe in buy, rent, and hold or just collecting properties for the sake of collecting properties. It's all about how you make money work for you, leveraging an asset class that is real estate. And so today, I just want to build some foundation for everybody. And speaking of asset income protection, this is definitely the epitome of asset income protection in terms of disclaimers. So all of you real estate investors, business owners, you know there's always got to be disclaimers somewhere, somehow, okay? So that you can do a little bit of CYA. However, again, I don't know about you. English is not my first language, so I really like what Einstein said, is that if you cannot explain it to a 6-year-old, you probably don't understand it yourself. And so all that legalese, all that means is what we are telling you is that we're not here as financial planners. Actually, do we have financial planners and accountants in the room? By a show of hands? No, not today? Okay. I mean, I was hoping that we would actually have some. That's okay, though. And we're also not tax advisors and lawyers. Again, I know my parents really was wishing for me to get some letters behind my names on a business card. However, that didn't quite happen. I mean, I don't know. Ryan, do you think BBA counts? Because you have one too.
Uh, you know, in today's day and age, it seems like a BBA is the new high school degree to some degree.
Feels like that, doesn't it?
And you have a
And I
lot of
think
basic employers that are asking for it. So, but you know what? I didn't formally get one, but I feel like I've made my own MBA,
there you go.
being a massive bank account.
Exactly. So redefine what the letters mean for yourself. And all we want to share with you today is that we're constantly putting on our investor's hat. And we are learning and training other people on how to most effectively and efficiently work with licensed professionals. Because after all, we are always learning how to leverage. Because when you leverage, you learn to build and scale. And when it comes to building business and income streams and wealth, do you think it makes sense to build scale? Yes or yes? Absolutely. And so we're constantly leveraging other people's knowledge. That's what all OPK is. OPT, other people's time, OPE, other people's expertise, and OPM, other people's money. Now, if you're wondering why we're doing it this way, hello, Mirai. If you're wondering why we're doing it this way, it's simply because the fact that, actually, out of curiosity, if you can just wave at me or use your emojis. Who here has read a book called Rich Dad, Poor Dad? Okay. I mean, if you haven't read it yet and you want to get into real estate investing, I would highly recommend that. And on a sidebar, the cash flow quadrants actually is my favorite from Robert Kiyosaki. So if you haven't read that one yet, to me, that's a must read. However, Robert always talks about the fact that in school, because this is the way most of us are trained, when you leverage other people's knowledge, that's considered cheating. However, in real life, in building businesses, when you leverage other people's knowledge, time, expertise, and money, that's considered being extremely intelligent financially, so that you can create win-win situations at every turn. And so this is why we always say that being an educated investor is really the most powerful position to be in. And so with that said, I do want to remind everybody this video is being recorded because there will be people that are requesting to view this, and simultaneously it's being live broadcasted onto my Facebook page at the moment. And so just FYI. And with that said, I know some of you are brand new, so welcome, welcome. We want to quickly share with you who Trust Your Talent is. We are made in Canada and the USA, and actually we are already global from day one in terms of our entire community base. And so what that also means is, from a training curriculum perspective and from experience perspective, we do right now have the largest curriculum in real estate investing and financial education across the globe. So with 16 different courses within our curriculum, nobody else actually comes even close. And within the team, we actually have investors and business owners that have had active businesses and deals right now in Canada, US, UK, China, Hong Kong, Taiwan, and our entire curriculum and mentorship can be delivered in English, Mandarin, and Spanish. So really our goal is to help people create financial independence. By the way, sidebar, my latest favorite book, if you're a reader, actually I'm more of a listener. However, if you are a reader, my favorite book lately is called The Psychology of Money. Okay. And this is what we always say at Trust Your Talent. We are here to learn how money works and how we can make the money work much, much harder for us. Because who here thinks that they work really hard by a show of hands? And you think your money's super lazy? Keep your hands up. Yeah. And that's the whole point of this. Okay. And so moving forward, we have the most bespoke curriculum. What that really means is that there's no one size fits all for somebody's financial journey and financial education. And we have the most tailored and customizable curriculum in the marketplace today. And the other thing also is all the coaches, trainers, and mentors on the team, we walk the walk. That means we're all active business owners, in case that wasn't clear earlier, and we're all active real estate investors ourselves, okay? So we are always bringing the most up-to-date and relevant information and knowledge that we can share with you, in addition to the experiences that we collectively have. Because why is that so important? We always say that information is super cheap these days. Anybody that's got access to a smartphone these days have access to loads of information. However, if it's not relevant to you, it might as well be useless. And so the running joke has always been, if information alone was enough, we all have 6 packs and be billionaires by now, right? And that's not the case, because it needs to be distilled and structured into education and knowledge and experiences so that you are able to apply them with some handholding. And so that's why we believe that your journey to financial independence and your journey to financial freedom needs to be in a full immersion environment for at least 1 to 2 years. I mean, anybody in the room is like me, an immigrant, where English is not your first language? Okay, I can see a few hands, thank you. And English is not my first language. I didn't start speaking English until I was 17 years old. And it was extremely, extremely challenging in the beginning. However, looking back, I realized what's really helped me is the fact that I was basically dropped into the boonies in the lower mainland BC. What that means is I had nobody else that could speak my mother tongue with me. So I was forced to be fully immersed in an English speaking environment. And that really allowed me to pick it up a lot faster. And also learning how to invest literally is like learning a brand new language. So we are always helping you adjust how you do things, how you approach things, and tweaking and improving your thought process at every turn. And the idea really is, Ryan has one of my all-time favorite quotes. Do you want to share that? This is not
So a lot of people out there, especially in the digital age, are looking for get rich quick schemes. And I like to say that this is not a get rich quick scheme, but it is a get rich for sure game. When you do it
Absolutely.
right, when you take your time, when you follow the fundamentals and do not compromise on the fundamentals, because that is a good way to get bit. When you do it right, it is absolutely a get rich for sure game.
Mhm.
Just take your time.
Absolutely. And this is why at TYT, we always see that there are single strategies being taught out there. There are single approaches being taught out there. For example, investing in multifamily, which is incidentally what Ryan trains and is very good at, and also raising funds. However, there's so many other ingredients that need to be put into the pot so that you are able to face every economic situation. Now, my personal goal and the fancy way that we say it in Trust Your Talent is our mission statement, which is to help create financial independence one person at a time. However, like I said, my plain English version of that is I would like to help you to never have to worry about money again in the next 2 to 5 years. Is that good with everybody? By a show of hands. Awesome. Because once you understand how money works, you can master it. And it should never keep you up at night. Okay. And so on that note, what we're going to do now is I'm going to take off the formal portion of this and I'm going to let Ryan share a little bit about the typical structure that we actually use. We're going to build some foundation with you. And honestly, though, at any given point, if you have any questions, unmute yourself, type it in the chat box. Ryan are here and I are here to support each other. So if he doesn't catch what's in the chat box, I'll make sure that I do as well. However, I think he's got multiple screens compared to me right now. So
So yeah, I appreciate the setup there, Tim, the warm intro. And obviously appreciate everyone being here this morning, sharing a coffee with us, or in Richard's case, a mimosa, jealous. But whatever your poison is, so to speak. I had a student actually ask me to put this together, one of my mentees, because corporate structure is so often a huge question. I don't know if you caught it on the title slide, but there was a little image in the top right, and it says it's not what you make, but it's what you keep, and that is huge in this game. And honestly, something that I struggled with even myself. I mean, none of us are infallible. We all have our vices and our stick ups. And I came from a high level sales career, was a partner in said company as well, and some of you know my story, right? A very heavy set of golden handcuffs, and it was very comfortable, and it was tough to let go of that. But the thing that I really had to come to realize, going back to that quote, it's not what you make, it's what you keep. With proper corporate structure and looking at the way that corporations are taxed, you have to make far less in terms of living and sustaining the same type of lifestyle, right? When I was a T Ford employee, towards the end of my career, I was paying 54% in tax. Can you imagine that? I was basically working through June for the government, effectively. Does that seem to anybody here? Show of hands. Would that seem enjoyable to anyone? Yeah, sorry, John. Trick question. I set you up there. Yeah, you're absolutely right. I mean, it was so frustrating. And as I worked with our power team that Tim mentioned, other people's time, other people's knowledge, expertise, get great accountants, get great lawyers, get great realtors, property managers. They are worth their weight in gold, particularly for today's session, lawyers and accountants. You need great ones. Now, your corporate lawyer doesn't necessarily need to do your real estate closings, right? They're probably a little bit too expensive for that type of stuff, but get a great accountant for your corporate stuff, for your corporate structure, for your contracts, for your joint venture agreements, for your shareholders agreements. They will make you money. And at the end of the day, their invoices are a business expense. And that's to get to the structure here. That's part of the game too, right? As individuals, we pay tax on the top line, right? We see it on every pay stub. The government takes their pound of flesh right away. With a corporation, the tax is taken off at the end of the year with what's left. Right? So you have all your income coming in from whatever strategies you choose to execute on, right? Whether it's multi-unit income properties, lease options for some of us in the room that we see, infills, private lending, whatever it might be, right? You want diversity, and obviously you'll see that throughout our curriculum. But that comes in, and from that, you're obviously paying your operating expenses on your given buildings. You're paying debt service on those buildings. But you've also got to pay other professionals, right? You've got to pay your property managers. You got to pay those lawyers we just talked about. You got to pay your accountants. All of that comes off. And whatever is left at the end of the year is then what you get taxed on. And as you build, as you have those creative conversations with your accountants, things can get very interesting. A good example with the management company, we'll elaborate on this in a second. The management company we see on screen on the right-hand side. Actually, everybody can see this just to make sure. Shouldn't be carrying on. Show of hands. Perfect. Okay. So that management company, you can start having some fun with that company. Some of my family has been growing recently and is going to continue to grow. We're expecting a daughter. It's a girl. Best thing that could have happened. So Laylee's going to be joining us in October, I would imagine sometime. Xavier's going to be promoted to big brother. So, but that being said, we needed a bigger vehicle. And we've already got other vehicles. Shefali has a car. I have a toy. Those of you that know, I'm a big car guy. But we could clearly justify to the CRA that we already have a family vehicle. And as such, the new vehicle, the large SUV, is written through the management company. It's a lease through the management company. So now that helps us to write down our income, and we pay less tax. And we get to start taking care of some of our life essentials. Right? Also, as you're operating day to day, I'm assuming invariably, how many of us on screen are married or have a spouse or a boyfriend, girlfriend? Yeah, it's nice to go out for a nice little meal here and there, right? Or maybe spend a day at the spa. That could be your annual shareholders meeting. You take a weekend at the spa, you book a package, etc. You're staying overnight, you're having a nice meal. I'm assuming at some point you're going to talk some type of real estate, invariably, if that's the game you're in. It's all that needs to happen. Meals with friends. You have a nice meal. Hey, we're so excited. We're working on closing a new apartment building. We just got it under contract. A little bit of value add. We're working through our due diligence right now. That's now a business meeting.
Well, I want to just add on that, Ryan. This is why we talk about financial education and we use real estate, because finance is in every aspect of everyone's life, no matter what status you are, your age, whatever. Money, we need money. And the other thing is real estate is something that is also in every aspect of everyone's life. It's the two top thing that we use to continue to grow and scale, and everything is relatable to business.
Absolutely. So it's a great point. And I'm assuming, some of us might have gardens in the backyard. Maybe some of us might even have chicken coops. So you have a little bit of food in your backyard, maybe. However, I'm sure you got to go to the grocery store from time to time, yeah? So let's say you're on your way to the grocery store and you're driving by a building and it looks pretty dilapidated, or maybe there's a for sale sign. You come home, you punch it up. You're trying to find, if maybe there's not a for sale sign, you're trying to find the property management company or some type of detail about it, or you're looking up the listing. That now became a real estate trip. that mileage, for example, right? And this is the value of having a great accountant, and having those conversations. But anyway, to kind of start diving into what's on screen, again, this is the foundation under your business. I'm assuming none of you, not necessarily being builders, but are there any of you here that would just start slapping a house up on dirt? Or would you maybe put a proper foundation under it? Probably a good idea to put a proper foundation under the house that you're in, right? Otherwise it would fall over. Same goes for your business, right? Your business is what's going to sustain you, your family, your lifestyle. So it's important to have a rock solid foundation under it. And this is the core part of that. So on screen here, we see Shefali. She's my wife, for those of you that don't know, and really, truly the brains of the operation. She's an engineer by trade, and I give her full credit. She keeps me in check, and that's important. We need those types of partners. So you'll see up top, though, we aren't mentioned in the same box. And that's the beauty for those of us that are in a relationship with our business partner as well. We can have two separate share classes up top. And that doesn't mean that either has any less rights, right? We have equal rights. And what that allows us to do is income split or plan our income, right? I'm no longer in a T Ford role. I left at the end of last year, and we'll talk about the holding company there in a second. However, when I was, the last thing I wanted was any more income. Shefali has been leading our business day-to-day operations-wise since September of 2021. And so her income dropped dramatically when she left her engineering role. And as such, we were able to draft dividends to her as a Class A shareholder. But because we weren't both Class A, I was Class B, again, same voting rights, same everything, but I didn't have to take the dividend. It all went to Shefali. And it's all coming into the same house, so we get to utilize it anyway, right? So having that separate structure up top, for those of us that have a significant other in some capacity or another, is a great way to plan. So you become owners in a holding company. And then a little bit of a side here, and it was at the request of a mentee of mine. I also had another holding company from the past, which I still have. Tim mentioned that some of us have owned and operated and sold other businesses. So I'm in the process of selling my interests in a sales agency, which was what I exited to end last year. And the beauty of that too, as long as there's a common denominator. So I'm the sole shareholder in that holding company, and I'm a 50% shareholder in the holding company for our real estate. All of that money can flow tax-free. So I was fortunate over there on the sales agency side as an owner. It was quite a profitable business. We would draft dividends regularly every quarter, and decently sized ones at that. And so there was gravy there. There was play money, so to speak. And our last closing was a larger property. It was a 60-unit complex. And even as managing partners, in order to be taken seriously, we made the business decision. We felt like we needed to bring some skin into the game, right? Because we needed to raise $3 million to close on this opportunity between closing costs and some CapEx funds that we brought in, capital expenditures for roofs and mechanicals and things like that. And we thought it would be pretty unbecoming of us if we just expected our partners to bring in all the money and we didn't have any skin in the game in an opportunity of that size. We just didn't think we'd be taken seriously. So we made the decision to bring in $400,000. 270-ish came from that other holding company, right? So it just, boom, on paper, so to speak, came up to me and went over to the holding company. And then the accountant got creative, made sure that there was no taxable event for me as an individual. It was just an intercompany loan that is slowly being paid back through proceeds from our portfolio. With interest, right? Because you might as well make money on yourself. So there's a little bit of interest there too. Okay, so you can get creative with that. Now, but focusing on our real estate business, however, so I guess let's stop there. So looking at the two separate share classes up top, and that little curveball there being the other holding company, is there any questions with the top of the structure at the moment? Does that spur anything for anyone?
Ryan, can I just ask,
Sure.
Holdco, that would be like your branded company name, is that right? Or is that more just a paper company like ABC 123 Co?
Exactly.
Oh, okay.
Yeah, it's
Okay.
typically going to be your real estate company. That is your operating as, or your branded company. And it too, I mean, you can choose to put the name on the corporation documents if you wish, John. Or it could just be, 123 BC Incorporated, and then operating as, Grant Real Estate Holdings or whatever it might be. Tim?
Yeah, I just want to quickly jump in, and I'm pretty sure, Ryan, you meant the management company is the one that you would actually spend the marketing dollars to brand. And a lot of the times we do keep as many of our real estate companies as silent as possible, because these are the actual companies that will hold titles to your properties in the portfolio. So your management co could be the one that you name, you design the logo on, you design the letterhead on, you buy a domain name under, and the one that you would leverage to conduct all your active businesses.
Now, and really quickly to that, was everybody on the more recent mastermind where we had Carlo? He went over some. If you weren't there, and you have access to the mastermind collection, I would highly suggest going back to that session. Ton of value about branding and using tools as well to market.
Absolutely.
Sorry, go ahead.
Jumping in quickly, for those of you who are not currently in the TYT community, you'll see Vince, and then later on I will share with you how you're able to get connected and start your 3-call coaching call process, and just to see if TYT is the right fit for you. Okay, because the mastermind is an internal event.
Yeah, and that brand, that's what drives your business, honestly. And it needs to be consistent. Everything outbound should have that consistent feel, that consistent color scheme, everything like that. If you'll indulge, is it okay if I share a story with everyone really quickly, and then we'll get to Richard and Brandy? So some of you have heard this story from my courses, but the $80 million Instagram man, and it's, I think, just a great illustration of the camera is always on, and just be mindful of that. So, Shefali and I, we quietly went about doing our thing for a number of years. March of this year marked 5 years that we've been in business. And, we always make sure that we thank our partners. We really do truly appreciate them. This is a people business. Without them, we wouldn't be where we are. We'd have been burnt out a long time ago. As Tim said, we're not lawyers, we're not accountants, we're not realtors, we're not property managers. If we tried to be all those things, it is a very good and quick route to getting burnt out. So we always make sure that we thank everyone that had a part in the transaction. And this seemed to resonate with that individual. And so unbeknownst to us, he had just quietly been following us for 2 years on Instagram, looking at our posts, never liked anything, never gave himself away, until one day he sent us a direct message, a private message. And he says, "Hey guys, I love the way you guys do what you do. You're always very humble, low key. You're thankful of others. And I love that. That's the way I operate as well. Would love to connect with you guys for a coffee, my wife and I." Perfect. Great. So for those of you that, well, I think it's a chain throughout Ontario anyway, but Symposium, really great desserts and coffees. So I see some thumbs up. So we met at Symposium. My wife loves the carrot cake. So we had some carrot cake and a coffee, and we were chatting. And, this individual, very right. I mean, he walked the walk when he mentioned he likes being low key. Pulls up in an Ford F-150, jumps out with a Green Bay Packers hoodie on, just one of the guys, and you'd never know. And so we chatted, and, he says, "I've made all the money I could ever want in life, and then some. But what I want to do, which I'm sure is a goal for many of us in this room, myself included, I want to set up and protect my legacy and my estate for my kids. And from what I understand, real estate is a great way to do that. Now, I don't have the time to do it. I'm not interested in doing it because I do love my job, but you guys seem to be pretty good at it. So would like to perhaps help you guys grow and partner on some stuff. And so we had a conversation about what type of opportunity he'd be looking at, or him and his wife, and the scope. Because I mean, at the end of the day, you don't want to bring someone a $2 million opportunity if all they're comfortable with is a $600,000 opportunity, right? You've got to make those expectations and those desires very clear, so that you respect your time as well as their time. So we had that chat and we went on the hunt. So we found a 16-unit complex, and we were going through the paperwork for the lender, and we had to do a statement of net worth. And clearly this individual, very smart in his own right. He's in the tech space, the CEO of a big tech company. However, had a little bit of difficulty navigating this paperwork. And so he asked us to jump on a Zoom call. And so we jump on the Zoom call, he brings the paperwork up on screen and he's asking us questions. And my wife and I, we had to try our darndest to keep our faces straight, because as he was scrolling through the paperwork, it became clear to us that his net worth was $80+ million. And this was a direct message, a private message on Instagram from a very low key individual. Salt of the earth guy. Tim's had a chance to meet him as well. And you would just never know. So your brand is ultra important to your success, but be you, right? For us, like I said, I mean, being humble, low key, thanking our partners is the way we operate. If that's not you, there are some people that I'm sure we've all seen out there that are a little bit louder. That will resonate with some people, and off-put others, as will I, as will we, right? Just be genuine, because if you're faking it, people will tell, or people will know. So I appreciate you indulging. We'll get to the questions here. Richard, I think you were first.
Yes. So I don't know if this is how it works in Canada, but in my experience in the US, when you apply for a loan as a company, they look at who owns the company. And if you're more than, say, 20% owning the company, and you have to personally guarantee the loan. So just looking at the structure, if let's say you find a nice duplex in Ontario and put it under ABC, Ontario Inc., if the lender looks at the structure, they trace back, they see you and Shefali both 50-50 own this whole structure, they would ask both of you to be personally guaranteeing on the loan. Do you find yourself in that situation most of the time?
As we look at larger buildings, yes, just because of the net worth requirement. Once you start to have some strong financial history and maybe a strong balance there, you can have some corporations that start to stand on their own, depending upon the class of assets that you're looking at.
Mm-hmm.
But very often, yes, early on, until you have a number of years of history within that corporation, the personal guarantee will often be a part of the equation for sure.
Right. And the reason I asked that question is sometimes maybe I don't want, Kevin or my partner to personally guarantee the loan because his credit might be lower, or sometimes I don't want to personally guarantee because my credit is lower. So it may or may not be helpful to, at the beginning, to bring the person or, my partner to this holding company.
Right.
Yeah.
Yeah. And, keeping in mind with a decent accountant and lawyer, a new corporation can be set up, 24 to 48 hours.
Right.
Obviously, some upfront cost for that, some annual cost for filings and things like that. But depending upon the scope of the opportunity, it may very well be worth it, right, to avoid these types of situations.
And outside this structure that you set up, right? Like let's say Ryan, you don't want Shefali to personally guarantee the loan, right? And then because her credit may be lower, you may be getting unfavorable term. you would just create sort of a standalone entity. It's a
Yep.
little messy, but but financially favorable.
Yeah, or I could put something down underneath, say the other holding co.
Right.
That I own exclusively as well, right?
Yeah.
So,
Yeah.
yeah.
Okay. Cool. Thank you.
Great question. Thanks, Richard. Brandy, Tom?
Hi. I recently read that from somebody who is an accountant, and I don't know if you can answer this or not, but the 3-tiered structure is not the way to go because you get double taxed. And for those that don't know what the 3-tiered structure is, it's the holding company, real estate company, and management company. And I'm just wondering if you can comment on that, because I've heard a couple people say it now, and I just don't know, is that an older way of setting it up? Have rules changed that we should be looking at it differently?
Yeah, and you're right. I mean, it is dialogue that's certainly floating around out there, and there are differing opinions from a taxation perspective and things like that. However, my understanding, and again, on this in particular, probably best to go back and consult your accountant for sure.
Mhm.
But so long as there is a connected corporation situation, right, being 10.1% ownership or larger within Canada, money can flow between the corporations tax-free. Now, coming out of the top from the holding company to the shareholders, yes, of course, you're going to trigger some sort of taxable event. However, when you're paying yourselves as dividends, dividend income is taxed at a far lower rate versus active income, T4 income, right? And that's where having a candid conversation with your accountant, planning, especially as both of you exit, the JOB world, and planning how you effectively pay yourself, in some instances, maybe to show and qualify for credit versus just minimizing tax, that may change year over year. But that's my understanding. Again, I would certainly, consult with your accountant, maybe multiple accountants, depending on the opinion that you're seeing. Tim, do you have something to say on that as well?
Yeah, 1,000%. Because my personal opinion right now is that those posts are there to generate curiosity. It's, in my opinion, purely for marketing purposes. As somebody who's been audited by securities and CRAs for the last 13 years, I can confidently share with you that if you are looking to scale and leverage real estate to become your plan A, meaning you're building it as a legitimate business, the 3-tier structure, I will advocate it. I will fight for it till the day I die. And you have no idea how many people over the years now have come to me and said, initially my accountant didn't understand it and they were suggesting me to do it other way. However, I do want to share this with you though, because depending on your personal situation, what a lot of times what some people will do is that they will add in family trust. Instead of Ryan and Shafali in this case, they will add in a layer of family trust first before Ryan and Shafali gets to do anything. And so the trust will own the holdco, or they completely eliminate the holdco in this particular case. And this is where really the accountant and the lawyers actually come in. Now, other than Richard, anybody else in the US as well? Okay, so this is just one of the subjects that I'm super passionate about, because again, I've really had to learn this, and like I said, I've been audited multiple times. And honestly, though, that's the thing. When I first started learning about real estate investing, the world of business, and asset income protection, my original mentor said, it's not if you're going to ever get audited, it's when, especially if you're looking to grow in this business. And that's totally okay, because again, we're not teaching you to do anything bad or anything illegal per se. Everything that we're sharing with you is legit and above board. So yes, it might cause you some headaches initially, and maybe at some point it will cost you a few hundred or a couple $1,000s to have your accountant and your lawyer to prepare all the documents that the authorities are looking for. However, everything we're sharing with you is tried and tested after over decades. Okay, in Canada and in the US, where I still invest in. Okay, and so coming back here though, I will say this: Because a lot of the people, and by a lot of the people, I really mean that from what I've seen, not trained in financial education, but simply trained how to acquire properties, they are the ones that tend to neglect the proper structure. And they are taught to just put things in their personal name, or these days, it seems like what's popular is GPLP again. And so general partnerships and limited partnerships, and by show of hands, if you don't understand what that is, because we might do another session on that, and we don't have all the time in the world to get into that today. Okay, so general partnerships and limited partnerships. If you've heard of the word syndication, that's typically how it's done, and usually that is done because the projects are a lot bigger. Usually, in my opinion, if it's not over $100 million on the deal, GPLP structure probably doesn't really make sense. Okay, and it's a lot of setup costs. Now, coming back here, I mean, at a multifamily conference last month, I actually share how I acquired initially 10 years ago a $5.2 million deal with just optioning it as creative financing. And there was not even, it was joint venture and option structure. I didn't even need GPLP. And back then, even now, there are some lawyers that said, you know what, you can do a GPLP structure even if the deal is only $3 to $5 million. And at the end of the day, if you run a business, you understand you're constantly looking for ways to maximize profit or minimize your losses. And how you do that is by controlling how much money you make and how much money you spend, as simple as that. And so if you're spending a lot of money on legal and accounting, that naturally eats into your profit margin, which for most of us is cash flow. And so I'm going to park that for now, though. I want to know who here has never been exposed to the 3-tier structure. Okay, so 1 person, 2 people so far. Okay, Dave and Diane, you guys are going to be well covered, because as you go through the curriculum, you're going to go over this. However, Grace, I see that you put your hand up as well. And so I know Ryan's been doing his magic on the screen for everybody right now. So I want to bring your attention to just the holding co, and then the real estate co, and then the management co. Okay, those are the 3 core corporations that forms your basic 3-tier. Now, if you remember, before Ryan put in the family trust, it was Shefali and Ryan on top. So if you can look at the screen quickly, your real estate co, management co is your tier 1. Then you have your hold co, that's your tier 2. And then you personally, that's your tier 3. Okay, so that's why we call it the 3-tier structure that typically looks a little bit like a triangle, with you being the main shareholders on top first and foremost. And the second thing about this, and I'm going to complete my thought earlier, people that are not trained in financial education, they are training to buy properties only. More often than not, if they stay small scale and they do understand a little bit about asset protection and income protection, they'll probably get incorporated. And so what they'll only do is they will get a real estate company done. Okay. And so, you know what, Ryan, do you mind? I'm actually going to quickly take over and do my whiteboard.
Oh, sure. Yep.
Quickly. Thank you. And so many of you, if you know me, this is my style. I like to doodle a lot. So, and I just find that I think as adult learners, we need to visualize things. Okay, so everybody can see the whiteboard? Yes? Okay, awesome. I'm gonna shrink the my squares here so I can see as many of you as possible. So this is basically what we were talking about, okay? We have the main holdco, and then above that, we had Ryan and Shefali before. Okay, whoops. It's a new writing pad. I usually write a little better than this, just saying. And so under here, you typically have your management company. And again, this is not a property management company. It's strictly a management company, okay? Because especially if you're Canadian, when you have a property management company, that typically means that you have to go through the provincial testing and licensing process. And most of us don't have that unless you do, okay? And then you have the real estate company. And so this is why, again, tier 1, tier 2, and tier 3. That's what forms the 3-tier structure, first and foremost. Okay. And so now this, as mentioned earlier, it holds title or holds titles. So this is where all your properties are under. And again, if you've never been exposed to TYT yet, make sure later on you actually make the time to speak to a strategy coach as well. I pressed the button on this thing and now it's not writing again. Hang on a second. Okay, so this is where you would hold titles of all your corporation. Okay, and then what happens is clearly we need to be making money on a monthly basis, and when we buy and when we sell. And so what that means is on a regular occurrence on a monthly basis, typically speaking, any cash flow will get rolled over and paid into your management company because how these things are tied together. Okay, so we have control over all the money flows and how the money flows rather within the structure, because initially most of us will put what we call a shareholder loan. We inject that into the holding company, and then we inject that into the management company, and we inject that into the real estate company. And so Richard, early on, you were talking about personal guarantees. And a lot of times the personal guarantees will only happen under holdco. And for those of you who are in the TYT community, you understand the whole S&P concept and the whole 3x3 requirements these days. So 3 strategies in 3 different markets. So when and how do you set up new real estate codes is really based on, again, your strategies or a new market that you go into with the same strategy. Okay.
Tim, if I can really quick.
Of course.
One general rule that I use when I'm setting up new real estate companies, say you and a particular partner own some assets. And then if you're securing something else with the same group, the same people on the top, you may or may not want to keep it within that corporation. Some people have a rule that they don't want any more than, say, $2 million worth of real estate in one corporation. However, if you're securing a new asset and you need to introduce a new entity, a new person or their corporation, always a new corp, because you do not want to expose those real estate holdings, those assets to the new individual. They have no right? They haven't put any work in there. They haven't put any capital in there. So you create the silos, and that's what the corporations do. They help to protect your assets and your income.
Ryan, sorry, when you say create a new corp, are you talking about a new real estate corp?
Yes,
or
sorry, a new real estate corporation, yes.
Okay, that's what I thought.
Yeah.
Appreciate
Awesome.
the clarity.
Thanks, Ryan. And I do want to, at this point, quickly stress once again, this is why the whole session and the discussion is around asset and income protection. And I always like to actually say that between those two, when it comes to the tiered structure, and 3-tier is how we start, okay? I mean, if I show you our org chart these days, it's gonna look like a giant spider web at this point globally. And the thing about it is 3-tier is where we start for a reason, because from an asset protection standpoint, I always like to say this is probably about 25% of the factor. 75% of the factor is income protection, because remember, it's not how much you make, it's how much you keep. Okay, and this is why we have the 3-tier structure to begin with. However, the asset protection component comes in when you have the different layers. And so the story that I typically share that makes people understand this concept is very quick, is let's say these days, especially thanks to COVID lockdowns, who here by a show of hands have things delivered to our doors instead of us having to go out there? Whether that be food, shopping, day-to-day regular things, right? Most of us have our hands up. So when you are a real estate investor, okay, your revenue streams mainly come from rents. Rents are paid by tenants. Do you think your tenants have pretty much the same consumer behaviors these days? Yes or yes? Absolutely. They order things online from Amazon, from Uber Eats, from Skip the Dishes, just like we do. And so what happens is, again, most of us live in a very beautiful country that is called Canada. What that means is it's wet and it's cold and it's slippery. And so imagine this. One day, an Uber Eats guy, okay, putting himself through university, preparing to become an engineer or a med student. They're delivering a pizza to one of your tenants' houses. And then on the way out, accidentally slipped because your tenant forgot to shovel the snow. And guess what? This is where the lawsuit starts to happen. Okay, so the lawsuit will start here at the very bottom because let's say this is the property where they slipped on. And so when the lawsuit starts, the delivery guy's lawyer is going to say, hey, you know what? I noticed that this property is actually not in a personal name. So what that means is we're going to have to do some digging into, okay, well, this company owns this property. Is there any money in there? Because why would somebody start a lawsuit? To go after you financially for compensation, for causing them distress, and for opportunity costs in this case, because maybe at the hospital now, the doctor's going, ooh, I am so sorry. Your career as a doctor has officially ended because you've pinched a nerve, you've injured yourself really badly. Okay, even though you're not a vegetable, you're not going to become a doctor anymore. And all of a sudden, the lawyer's having a field day going, well, the opportunity cost of that through your entire career right now as a 21-year-old young man is about $8 million. And if we win you $8 million, we will charge you $2 million. You get to keep 6 and you get to put it into a compound interest account for 5% a year. And then you're going to end up with $50 million by the time you retire. So throughout your entire lifetime, you're taken care of. Does that sound enticing to them? Absolutely. Do you think they're willing to shell out a $10,000 retainer upfront first? Absolutely. So that's what happens. And so the lawyer will do some digging. They'll find out, ooh, the holding company actually owns other properties. And that's why, going back to Ryan's point earlier, is that sometimes you have lawyers that will advise you, maybe you don't want to put too many properties under one corporation. And again, for TYT trained investors, we always say it's largely dependent on S&P. Okay, your strategies and your markets will likely determine that more than a dollar value these days. Because that $2 million advice, actually, I got it too when I first started because I was leveraging lease option single family homes as my main strategy. And I'm in the Edmonton area. And back then, 13 years ago, the average single family homes are about $350,000 to $500,000. So that's about 4 to 5 properties, and each real estate company is maxed out. Okay. And the other thing is, if you need to raise funds or if you need to leverage other people's money, you want to keep your deals as clean as you possibly can, so that in this situation, it's not going to run into you're not going to run into a situation where, oh, okay, so property 1 and 2 that, let's say, Ryan is managing, okay, is actually a joint venture with Dave and Diane. And then property 3, 4, 5 is actually a joint venture with John. All of a sudden, all 5 properties, different owners, are now subject to this lawsuit. Okay, and so that's why this is asset and income protection. However, let's assume that it's all the same owner, same OPM at this point. What happens is now, and also, again, if you're financially trained, you will learn to leave very little to no equity in every single property, okay? We teach you to max out, to leverage as much as you possibly can, because debt is the new wealth, okay? For those of you who didn't know that Canadian dollars, just like the US dollar, is not backed by any hard asset, it used to be backed by gold. What that means now is our money these days is what we call the fiat currency. And what that means is it's actually, money is a form of debt, which means wealth is a form of debt. So learning how to invest is learning how money and debt works. Okay, I want to make that very, very clear, because I know this is where sometimes it goes up against everything we were taught growing up. And I had all these suspicions and skepticism in the beginning too. However, really think about it. During COVID, how much money did the governments print across the globe? Canadians, Americans, what was inflation like last year in the last 12, 14 months? Okay, it's simply because of the fact that the government can continue to print and print and print money as they see fit. And that's why our dollars are currently getting devalued every single day. Okay, so again, learn how to leverage effectively, even though, for example, if you have a borrowing cost of 10%, but on the flip side, you can make 20, 30%. Is it worth borrowing it? Absolutely. Okay, however, let's come back here to this example. The lawyer is going to find out, okay, there's the real estate company that owns 4 other properties. However, oh goodness, each property only has about $200,000 in equity. That's only $1 million. We're suing them for 8. And so now the lawyer is going to go, well, they also, obviously, every single property has property insurance coverage. And remember, when it comes to third-party liability coverage, you typically will choose $1, $2, and $3 million. I haven't really seen a company yet. So Ryan, if you have, let me know. That will go beyond the $3 million limit on a third-party liability coverage.
I have
Not yet, right? Yeah. So it doesn't matter if you're buying a $200,000 single family home or a $20 million multifamily. A lot of the times it's the same thing. It's just that when it comes to multis, you're likely able to purchase a commercial coverage in addition to the typical property insurance. Okay, so now all of a sudden, lawyers going, okay, well, these guys only bought a $2 million coverage. And even if we sue the heck out of the entire real estate co, $200,000 times 5 is $1 million. And so really, you're going to get $3 million out of it. Lawyers, not happy, because that means 25% of $3 million is a lot less than $2 million that they were going to get out of the $8 million they were suggesting. So now lawyer goes, well, first of all, Mr. Delivery Guy, all your retainers have run out. However, there might be another way to get you some more money than just $3 million payout. 2 is probably almost guaranteed at this point. Would you like to go further? By the way, it's going to take a lot more work now. So the next retainer is going to be $20,000. However, your $20,000 might turn into an additional $6 million for you. Would you like to do that? Okay, I'm not here to paint, a bad picture for lawyers. However, we all do something for a living. We're investors. They're lawyers. That's their job. Okay, and so what's going to happen now is let's assume that the delivery guy does not have $20,000 right now, but his parents are going, no, my baby's hurt. I'm going to go after them. Who here have kids, right? Your mama bear, papa bear instincts kick in. And so that's what happens. And then they're going to go up another level. So holdco now, they're going to find out, oh, hang on a second. This holding company really owns this real estate company and a management company. However, real estate company pretty much is shelled out at this point, and management company really is running at a loss. So what do we do now? Another 20 grand later. By the way, you know what? We learned that through this process, the holding company is owned by something else. Would you like to pay me another $20,000, $30,000 to continue to chase them? And so this is where the asset protection side of things comes in. The different tiers, okay, listen up. The different tiers and the different levels are there to discourage them penetrating all the way through your corporate structure to get to you personally. Now, if you're like some of our students that go, I was broke when I joined the program and then I declared financial freedom, so they can come after me all they want because I got nothing they can come after. But a lot of you, I'm going to venture a guess, you've worked for the last 10, 20, maybe even 30 years now. You've accumulated some wealth. That means savings account, principal residence, maybe RSPs, maybe TFSAs, maybe some stock options, maybe even already real estate and equity, okay? The moment they get to you personally is the moment all of your hard work and asset that you've accumulated over the years are 100% exposed. And so the tier structure really is to prevent them from getting to you. Okay, it's to slow down that process. And this is why if you really dig into the corporate structure of people like Warren Buffett, like Bill Gates, like Donald Trump, I'm going to use that name for now, not in vain. However, you're going to notice that it is virtually impossible for you to get through to their entire corp structure to prove anything. And that's why they can declare bankruptcies on management companies. Is it hurting their overall wealth? No, because they're sitting right on top. So we are training everybody to think and plan for the future. Again, not get rich quick, but get rich for sure, and protecting the wealth that you've created in the long term. So is that helping a little bit understanding why asset and income protection? And so in my opinion, the accountants that are saying that three-tier structure is outdated, they are not looking at it from a business or long-term business and asset protection standpoint. Because I will not disagree with the fact that, especially when it comes from an accountant, this structure costs money to set up, costs more money than a single company. It costs more money to maintain on an annual basis. Those are irrefutable. Like, I'm not going to debate that because those are facts. However, when you blend in income and asset protection, because remember, double tax, what is he referring to? Income protection. Okay. However, what happens to asset protection? So when we are hearing sound bites, we've got to learn, and this is where financial education comes in, is to make those decisions for yourself when you're getting all these marketing messages. And that's what we really want to do here. I mean, a lot of you in the community understands that. If you're branding to trust your talent, now you can see how we operate and what the thought process behind everything is. And so at this point, I know there are a lot of people that are going, oh my God, I'm going to do a 5-tier structure. Go for it. Go nuts. If you want to create that barrier, go for it. Okay, we definitely have students where when they join the community, they've got a lot more life experiences and a lot more wealth that they've accumulated. So once they understand this, they will go, okay, I'm going to add another tier to it. So going back to what Ryan was updating, basically they will now likely add another tier. So it's now a 4-tier structure before any of the family members are impacted personally. And so on a side note, before we go to Richard and back to Ryan, is that I want to make sure everybody, I know it sounds great to call yourself the CEO. We can be the boss and have all control and decision-making powers without having to call ourselves presidents and CEOs. Okay, because when you do that, guess what? The common conception is that you're loaded. You're the person that I go after when something goes sideways. Okay, so I was always suggest that if you're doing your marketing materials, your email signatures, your business cards, call yourself a consultant, call yourself a real estate investor, call yourself anything but the CEO or the president. Okay. Okay, so hopefully that answered the question in a very long form. However, this is a very touchy subject, so I want to make sure everybody understands it. Okay, Richard.
Okay.
And back to you, Ryan. So if you want to bring up your screen again anytime.
Okay. So just to confirm, the management company is the one that signs the management that in principle or on paper manages your properties. Is that correct? Okay. So when the management co, say when your property manager says, you know, this month's rent is ready, I'm going to send it through your management company, and the management company receives the rent, where do you transfer the money to? Do you transfer the management company back to your holding co and then transfer to your personal bank account? Is that how you direct the money?
No, it doesn't have to be that way. It can be directly. The line can be directly between the real estate co and the management co. And I'm glad you actually asked that question, Richard, because even in my example, I shorthanded that process. Okay, as in I drew the lawsuit starting from the real estate co. However, technically speaking, it would start with the management co. Why? Because the lease is going to be signed between the management co and your tenant. And then the lawyer is going to find out it's owned by a holdco. However, based on structure, it goes straight up. The lawsuit goes straight up. it doesn't go sideways, as in it doesn't move laterally, because what they're looking for is ownership. Because ownership typically is synonymous with equity, with money, with wealth.
Okay.
And a quick thing there too, with respect to the management company. I mean, you may choose, Richard, to actively manage some properties in your home market, for example. We still make the business decision to hand that over to property management ourselves. We tried that early on, thinking, it's a 6-7 minute drive away. Again, a very quick, easy way to burn yourself out. The angels sang. It was one of those movie moments. The beam of light comes down. It's like, oh, it's a beautiful moment when we handed over the properties to property management. So again, an active decision. So your management company would manage the managers, like you mentioned in your scenario.
Right.
However, as Tim mentioned, the leases are going to be written through the specific property manager. Have paper trail of that, right? Because we were making a financing application with a lender, and they got awfully confused. There was a learning for us, right? And they said, well, you don't benefit from the rent. It says it's through ABC Management Company and not yourselves or not your company. So we had to go back and dig up a copy of the contract and dig up part of the tenanting agreement in order to make that connection, right? So it's just all a part of making sure you have your ducks in a row, right? So personally, at this point, we make the decision to have just an active Dropbox account for every property. We have folders, every province, etc., and everything just kind of organized. So that way, as we choose, hopefully, to enjoy the fruits of our labor and travel the world or do whatever it is you want to do with your wealth and your time, you can still remain active within your business. All you got to do is find a cellular or a Wi-Fi signal, and you can send off documents. Some of you have been in classes of mine, and you heard, I've closed mortgages in Cambodia, in London, UK, right? And it's all possible with technology nowadays. That's ultimately what I think a lot of us want to be doing, right?
Yeah, I had to do that. I had to sign a property management agreement formally between the management co and my real estate holding company, because the lender is like, what's the relation between the two, And I guess originally I was also curious, once the rent is received by the management co, do I have to build this cash flow history of transferring money to management co and then management co, transferring money from management co to holding co and holding co to my personal accounts? It doesn't sound like I need to do that. I can just transfer it over to my personal.
I mean, a conversation I would have with your accountant for sure.
Okay.
For example, we make the decision to channel everything up to the holdco.
I see. Okay.
Any type of excess profits and cash flow from the management company and or the real estate company up to the holding, and then from there, sometimes you have some gravy sitting there. But as Tim mentioned in that whole example of exposing yourselves and your structure to a lawsuit, you never want to have too much gravy sitting around, right? Whether it's equity in a property. That's why we want to try to leverage properties as best we can. Don't over leverage and strip all the cash flow out of them, but be smart and have enough leverage there that you can continue to propel yourself, for example, with excess equity. And same with cash, right? I mean, don't have a lot of cash on hand because, again, that could potentially be made visible by a lawyer and exposed to being lost, right? So, it's either going to yourselves as an owner or to further propelling your business forward, in my opinion, based on the guidance that I've gotten from my team.
I think at the end of the day here, it's really just keeping it, in a way, we want to keep it complex. It's the corporate veil, and we make it that way so that it makes it a hard time for a lawyer to follow the money, essentially. So that's why we kind of do it that way. So if money's transferring from one account, one corporation to another corporation to another corporation, it's like there's like, by the way, for everybody that don't realize that the corporations are considered as an entity, almost like as an individual itself. And then that's why we have almost arm's length between everybody. So that way it keeps that complexity there.
Does that help answer the question, Richard?
Yes, thank you.
Awesome. Yeah, you're very welcome. Julia, you've got a question yourself? I think you may be muted.
Yes. So your suggestion is then establish this 3-tier structure from the very early on of real estate investment. Trying to figure out what's the, like a good timing to.
Can I say, Ryan?
Yeah, sure. Go ahead, Vince.
I think that's a good question that you should, when you're working with your mentor, to speak about, to talk about, because it really depends on where you are currently in your life, like even your financial resources that you have. Like if you already have a lot of things in your personal name, for example, like you have already multiple houses or maybe some buildings, then this may be a really good time for you to start to protect yourself. And that means when you start to branch off into corporations. Now, on top of that, when you're working with your mentor to sit down and seeing what you have right now currently in your life, then you got to talk about the different strategies that you're planning to focus on, because you might be doing short-term versus long-term. And that's going to help you determine what kind of how do you plan to structure your corporation from the beginning? Because if you do set up your corporation from the get-go, all three of them, that's probably the dream way of doing it. There's going to be so much cost associated for every corporation that you set up, and then it's going to cost you money for just managing it, and it may not make sense. Mm-hmm. And so when you're working your mentor or even your strategy coach, when it comes, you can start to discuss about these things, about what your game plan is, what your 5-year timeline is, or even your 2-year timeline. So that way you can figure out how to speak to your accountant and also speak to your lawyer to set these things up properly from the get-go.
Mm-hmm.
Okay, I'm going to jump in with a different perspective as well, just because, I've mentored quite a lot of students worldwide at this point over the last 10 years almost, is that everybody's situation is a little different. And in Canada, especially, as I mentioned earlier, some people, they've worked really hard. So when they actually decided to elevate their financial education and get into a community like ours, they are really looking to scale up, and they have the resources, and they might still keep their regular job or their business that's helped them, make the money that they have right now. And so initially they might just get the holding company done and the real estate company done first, as they learn and partner up and do joint ventures or do private lendings with other people within the community. And so again, I've also had students that ask me that question, if their resources currently are on the lower side, which typically means that they need to be the managing partner first before they have their own resources to, hold things, hold titles under their own real estate company. Then initially the 3-tier may not include the real estate company. It would just be themselves owning the holdco and then getting a management co under it first, so that they can hit the ground running. Mm-hmm. Does that make sense? Mm-hmm. Yeah. So it's not, once again, nothing is one size fits all. We're introducing you to the framework and the thought process and the reasoning behind it. And like what Vince said, when you start talking to the strategy coaches, and later on when you're in the program, you have a mentor helping you out, this is where it gets more customized.
Okay, sounds good.
Yeah, and I noticed that John also has his hand up. I'm just gonna say one last quick question, and then we're gonna pretty much be closing today's session. So go ahead.
Thank you. I'm honored to have the last question. So in my case, and I think you're aware of this, well, many of you are aware of this, and I'm sure others of you are in a similar situation. I am a JV partner on a number of deals. I don't have any of this structure in place. Strictly speaking, as a JV partner, so there's nothing on title with my name, etc. Does it make sense for me to run those funds that I'm receiving from my JV deals through a structure like this? Does that make sense?
Yes. Doesn't make sense is is a big question. And so again, it comes back to asset and income protection. And in this particular case, I would say, again, 75% more income protection. So does it make sense for you to see if you can keep more by going through that route, or your current method already works?
And so if I do go this route and set all this up with my existing JV partners, do I have, like, does anything legal have to happen, or is it just that I just start to take those checks and deposit them into this company instead?
You can definitely start doing that. Your accountant might slap your hand just once for that. And you just have to provide all the paperwork so that they can go back and make sure that they balance out your financial statement. Because all of a sudden, what that really means is that you now have asset or equity working for you, but they don't have the original paperwork to indicate that you've made that investment.
Okay, thanks.
Yeah, and for those of you who don't know what the components of a financial statement is, you definitely want to talk to a strategy coach to get something started, to start learning, okay? Because at the end of the day, it doesn't matter how many doors, how many properties you have, it all comes down to that financial statement, because that is your financial report card at the end of the day. Okay, Ryan, do you mind if I steal the screen back from you quickly?
Oh, sorry, I completely forgot I was still sharing. There we go. Sorry about that.
All good. Okay, so I'm just going to quickly share with everybody, okay, of some of the upcoming events. If you got your cell phone right now, this is your chance, or unless you're watching this on your cell phone right now. However, all these events are actually posted on our Eventbrite page already. And so make sure you actually go on there and you follow Trust Your Talent Academy so that you get notified on all the upcoming events. That's seminars and webinars. And these are no charge events. And then we also have, for those of you who are serious about starting your financial education journey, we have our Level Up Bootcamp and our life workshop coming up. Very similar components. One is online live, so there's no location restrictions. And if you're in the GTA, come and join us July 15th and 16th. And I'll share in a little bit in terms of what the workshop and the bootcamp entail. Okay, so make sure you scan that and now hit the follow button on Eventbrite. And so on that note, as I mentioned, next step, if you haven't got this going yet, again, there's no obligation. None of the strategy coaches bites. I mean, I don't know about Vince, but anyway, just kidding. None of the strategy coaches bite. And however, even if they do, most of these things are done over the phone or Zoom anyway, so you're safe. The point is, though, all jokes aside, is that we want to offer this simply because we are here as a community, as a training team, as Trust Your Talent Academy. Our true hope is to elevate the level of financial education in the general public. And way too many people out there are just seeking to do buy, rent, and hold, or they learn enough to be dangerous to themselves. And worse yet, they learn enough to be dangerous to themselves and their OPM. And to me, that's very irresponsible. If you have not watched any of my Daily Dose with Tim episodes yet, you'll hear a little bit about my story and why I'm so passionate about protecting your hard-earned money and somebody else's. However, the point is, here are 3 things that you can and will do when you make an appointment with them. So Vince, if you can help me out here and put down the link in the chat box, those of you who are not in the Trust Your Talent community or have not looked at a full program yet, you need to be doing that, because we don't want to help you put band-aids on your boo-boos. That's not what we're here for, okay? And so make sure you do that, follow the link, and get that call process started. There's no obligation. Again, it may not be a good fit for you. And frankly, we are quite selective and protective of our existing community. We love what we built here, and we only take 60 to 80 students, brand new students, on an annual basis, because we know that financial education is not for everybody. Yes, Vince?
Yeah, I just wanted to kind of share with some of the students here. as a strategy coach, we're really here to support you and support you on maybe some things that you're already working on, guide you through your thought process. And I also like to say we will challenge you on your beliefs and some of your previous programs, because that's what we're here to do, is to teach you. And in order to learn something new, you're going to have to be open and willing to accept new information. And that's where the challenge comes from. And so this is what we do at Treasure Talent, and we don't take everybody in. And that's the reason, is because we want, and for the students that are here right now, you guys know how this community is built. There's a very particular type of people we're looking for, who are go-givers, who want to grow. And by the way, this is a want. This is not a need. This is a want. You want to be better. You want to grow. You want more in life. This is the community that we have created for those individuals who are looking to continue growing and give back. And so, yeah, book the call with the strategy coaches. We're here to support you and guide you. So
Awesome. Thanks, Vince. And so the next thing here, as promised, we always deliver as promised. Bootcamp and workshop. What can you expect? So these are all the topics as well as materials that we will cover and you will receive. So you will see it's very, very jam-packed. That's why it's called a bootcamp. And bootcamp, you'll see once you get onto Eventbrite. And the next one is June 24th, which is exactly a week from today. Okay, it was exactly a week from today. So go and get yourself registered there. And for bootcamp, I'm just going to share this with you. It's $199.97 per person. Okay. The thing is, we know that from a value standpoint, it is way, way, way over $9,000. However, we are doing it for $199.97. And if you decide to go to the Toronto workshop, right now we have a BOGO deal, $297 for 2 people. And there is a capacity limit at the venue. So make sure if you're in the GTA and you want to go and do the live 2-day training, get yourself registered. I know some of you are already going, so I'm excited to meet you because I'm going to be there too. And so on that note, stay connected with us. I already shared with you the Eventbrite page. However, you can also follow us on YouTube, follow us on Instagram, and more importantly, when you go onto YouTube, and I've just gotten a lot of, I guess, kudos and positive feedback on some of the content videos that I've created. And all these things are very, very natural, as in they're unscripted, but they're very, very relevant and important to, I would say, everybody's journey as real estate investors. And so my Daily Dose with Tim, you'll find season 1, season 2, and some of season 3 there now. However, join the Talented Investors group on Facebook, and that's what the QR code is for. So once again, scan it. It'll take you to your Facebook account and hit join or request to join. And then starting Monday, because my Daily Dose with Tim, I go live at noon Eastern time and 10 o'clock Mountain, 9 a.m. Pacific time every day, Monday to Friday. And it's not scripted, it's somewhat structured. However, a lot of it is grown organically based on feedback, comments, and questions. As you can see, even a session like this, it can go in so many different directions because it's not one size fits all. And that's why it puzzles me when people flood towards, let's learn how to raise funds. Let's how to learn how to learn just how to buy multifamily. It may not be the right asset type for you just yet, depending on where you are. And maybe you're thinking too small, okay? And so make sure you do the 3 calls first with a strategy coach so that you have clarity. Lately, one of my favorite quotes is, the best time to have a map is before you enter the woods. Way too many get into this game without having clarity and a path to follow. And they get lost, they get hurt, which is not great. And so do your calls and stay in touch with us. On that note, anybody want to share anything? Last question, last thoughts? We have 1 minute to schedule end time. Ryan, Vince, anything else you want to share?
No, I think to what you just said though, Tim, so very true, and what I always enjoy about every session, right? Even if we wanted this to try to be cookie cutter, because I mean, at the end of the day, the foundational knowledge never really changes. But as you said, it's the people in the room and the questions and the stories and the anecdotes that send us down respective rabbit holes, I guess, if you will, and it's what keeps things so interesting and wonderful, right? Because I've said it before in my courses, in my tutorial, it's not just about us on the team, right? The floating heads with the trust your talent background, it truly is our community, the individual skills and knowledge and experience. There's a lot to be shared amongst everybody else in the room too. So.
And yeah, I want to say it definitely is not a one size fits all. If anything, we all come from different walks of life. Some may have more life experience, and some are brand new. Our age, our sex, and all these goals that we have, the education has to meet you where you are in your life, and it has to meet you where your goals are and why you want to do this to begin with. Even in the topic of the corporate structure, it's super important for us to set that up right from the very get-go, because if you haven't set it up right from the get-go, you're going to have so much problems down the road, and it may not come up the first year, maybe not the second year, but maybe in the third year it comes up and it was something that you made 3 years ago, something as little as that. And so this is why we're here, to help you see things that you just maybe miss yourself. So, yeah.
I think you're
You're
muted.
muted.
Oh, we got a couple more minutes because I just remember we started at 4 minutes past the clock. So
Do you guys have any questions?
yeah, do you guys have any questions? Grace, you're in Toronto. Are you going to join us at the next workshop?
You're muted. You're muted.
Unfortunately, I can't because I have a commitment that day that you will be here, but I'm looking forward to be trained by your group. This is the reason why we try this too, so we know how it is with your group.
Awesome. Awesome. And there's also the online bootcamp next weekend too. So if that works better for you.
Thank you.
Yeah. Awesome. And Julia, where are you from?
I'm from Toronto, and I'll be there in the in-person workshop, so I'm really looking forward.
Awesome.
Yeah.
Excited
You're
to
there.
meet you.
The bootcamp and workshop are the same content, or
They are definitely, yeah, very similar. It just, there's some variation just because of delivery. And that's the thing. And at Trust Your Talent, our entire curriculum is delivered in multiple ways. We have on demand, we have online live like this, and we also have live in person, because everybody's learning style is different. So we want to make sure that you maximize your learning experience and retain as much as you can. And the most important portions, usually the one-on-one components with a strategy coach like with Vince and with your mentor.
I also want to add in that when you mentioned the learning style, so Trust Your Talent has invested in a lot towards learning, like education and learning, how to actually deliver education properly for people who are auditory versus visual versus even kinesthetic. And so I like to say that there will be application and knowledge at the same time. So it's not just learn everything and then look, okay, 1 year later, I'll start doing things. No, it's like you learn and you apply, you learn and you apply. And it's baby steps. And the whole goal of it is to stack on. Every time you learn something, you stack it on everything that you just learned, and you stack on more and you learn. And that way there's a progression of level going up to it. And then you get more comfortable and more confident when you execute on an actual deal.
Mm-hmm. Right.
Yeah.
Both action and knowledge, yes.
Build the confidence competence loop, so to speak.
Yeah,
right?
exactly.
Gain knowledge, you get more confident, you execute, you pinch yourself, you're like, oh, that didn't hurt too much. you're gaining competence, and then the ball just starts rolling.
Yeah.
Yeah. Aisha, where are you from?
Hi, I'm in Halifax.
Oh, wow.
Yes.
I'm from Nova Scotia.
Oh, are you?
I'm living in Edmonton now, but I'm originally from Cape Breton. That's where I grew up, and I was the only Asian kid there. I was Scottish, Irish, and French. That was my surrounding of people.
Oh, wow. Okay. Yeah.
Yeah.
I actually became aware of this group at the multifamily conference. So I just thought I would check you out and see some of the work you're
Awesome.
doing. Yeah.
That's awesome. Cool. Have you had a chance to start a conversation with a strategy coach yet, Aisha?
No, but I'm looking to book one, but then I have to
Awesome.
choose one. So I thought I
You
thought
don't
if
have
you
to
wanted
choose one. However, you do get more tailored, suggestions because then you don't have to repeat yourself multiple times. However, you don't have to choose one.
Oh, can I send just a general request? Because I looked at it, I'm like, oh no, now I have to choose. Okay, so that's what I got. But I will. I will.
Yeah. Well, Vince is here. Why don't you start with him? And then if you want, you can make your way through to the other three as well.
Yeah. You'll find the better looking ones, whoever that is to you, and then just pick that one.
Right? That's a good strategy.
You see, we have fun. We joke around. Investing is serious, however, on a day-to-day basis.
Yeah.
I think you'll be okay. Either anyone you choose to talk to, you're in good hands, and I have faith in that.
Yeah.
The whole team is wonderful. Absolutely.
Hey, Aisha, did you happen to show up at the boot camp day?
No, I wasn't there. Was that where you did it in person? Was that an in-person one or?
Yes, it was an in-person one at MFC at the multifamily conference on Friday.
Oh yes, no, I was there. No, I was there. Yes, I was there.
Okay.
That's when you spoke because yeah, I think did you only speak at the boot camp? That's when you spoke.
I
right?
spoke at the boot camp, and I was also part of the panel on Sunday as well.
Yes. Okay. Yes.
Yeah.
I was there for the boot camp. Yeah.
Awesome. So, I think I promised everybody that I'm going to do a part 2 follow-up on my presentation on bootcamp because so many people came to ask me, how did you do it and why did you sell it? And there must be more details. And yes, there were a lot of details. It was a 14 months deal to complete.
Right. Yeah.
And so we've already set the date already. So make sure you follow the Eventbrite page because on June 29th, I'm doing a part 2 follow-up. On that for all the MFC attendants.
Okay, great. Yeah.
Yeah.
Okay. Yeah.
Any who are interested.
I'll look out for it.
Yeah.
Yeah. Okay.
Awesome. And Tabish, nice to see you again. Min, I don't know if we've met, and Evelyn and Rocky.
Julie, how did you find us, by the way? Do you know somebody in the community?
Eventbrite. I searched real estate.
Oh,
cool.
Right. Yeah. Very
awesome.
Awesome.
I met you. I attended your multifamily conference, and from then I'm following you, and I'm having coach calls with Nina. I've just started.
Awesome.
So
awesome.
Yeah.
You're in good hands.
Thanks.
Yeah.
Nina
nice to
didn't
meet you.
bite you,
Finally,
right?
I see your face.
Nina didn't bite you, right? She was nice to you. Oh, you're muted. You're muted there, Aki.
Yes. Yeah, I skipped the homework, and she said you have to do your homework and come. So I'm doing the homework. I'm getting ready for Tuesday's call. Yeah.
Awesome.
Good.
Yeah, that is how we roll. I mean, you know what? It's a hand up, not a handout. So you got to do your part so that we know how to best help you and support you.
It's so very true that growth happens outside of your comfort zone, right? So from time to time, you might be poked and prodded by some of us, but know that it's truly with the most loving intent and the best of intent.
All out of love. It's all out of love.
Yeah. Oh, Evelyn, I just saw your text. Thank you. Okay, well, on that note, if there are no further questions, just note that this session is recorded and will be published on YouTube in about a week's time as we clean things up a little bit. And as mentioned, you can also find My Daily Dose with Tim there, and make sure you join the talented group and subscribe to our Eventbrite page. So enjoy the rest of your Saturday and your weekend. We will see you.
Okay, thank you.
Bye, everyone.